Welcome, ladies and gentlemen. My name is Peter Yusuf. Together we'll be going through a webinar about the week ahead. Now, before we start though, let's have a look at the disclaimer and our risk warning. Just for a couple of seconds. Let's make a start with the intro about the coming week. Now, the market in the past few days continued to be liquid, with intensified volatility since today's Asian session, also due to the new African COVID variant. In the coming week, we get a high number of high-impact financial releases from across the world, which are to be crowned on Friday with the release of the US employment report for November. On Monday, we note the release of Germany's preliminary HICP rates for November. On Tuesday, we get China's NBS manufacturing PMI, Eurozone's preliminary HICP rates for November, and Canada's GDP rates for quarter 3. On Wednesday, we note the release of China's Caixin manufacturing PMI figure for November and the US ISM manufacturing PMI for the same month. On Thursday, we get Australia's employment data for October and the US initial jobless claims figure, while on Friday we highlight the release of November's US employment report with its NFP figure and also note the simultaneous release of the Canadian employment data for the same month. On the monetary front, we note the planned testimony of Fed Chairman Powell with US Treasury Secretary Yellen before the Senate, while Fed officials as well as policymakers from other central banks are also to step up and make statements swaying the market's attitude. Let's move now to the USD, and this would be the USD's 4-hour chart. Now, note how the upward movement seems to have been interrupted today, and practically the index has dropped below the 96.65 support line, now turned to resistance. We tend to be on the side to switch our up bias for a bullish outlook in favor of a sideways movement, given also that the RSI indicator below the 4-hour chart has a downward slope. Now, specific levels to keep an eye out would be the 96.65, which provided support practically yesterday. Higher than that would be the 97.30, while even higher the 97.80. To the downside, we would note the 96.15, which provided practically some resistance and some support, considerable commotion for the index's price action, and that was around the 19th of November. Lower than that would be the 95.60, which provided some support around the same date. And lower than that would be the 94.95, which provided support around the 15th of November. Moving now, and before we move to the USD's fundamentals, as a general comment, the USD, note how it's about to end the 5th week in the greens, reaching levels not seen since July last year. Moving now to the fundamentals, USD's advancement to higher levels was also prompted by the release of strong US economic data and the Fed's November meeting minutes, which showed a rather confident Fed. The minutes showed that a number of policymakers of the bank were open to the idea of expediting the tapering of the bank's QE program, indicative of the climate in the meeting, which could result in a faster tightening of the bank's QE program. We expect that Fed officials are to continue to affect the market's mood, and we highlight the scheduled testimony of Fed Chairman Powell before the Senate on Wednesday, while other Fed officials are also scheduled to speak in various days during the week. Should a more hawkish approach be confirmed, we may see the USD rising further. Also, it should be noted that the initial jobless claims figure for the past week, which was released last Wednesday, dropped below 200K, a low level not seen since 1969, making headlines as the ongoing tightening of the US employment market was implied. In the coming week, we highlight the release of the US employment report with its NFP figure for November. Now, should the report actually reaffirm the tightening tendencies within the US employment market, we may see the USD being further supported. As for other financial releases, we note on Tuesday, the 23rd, November's consumer confidence, while on Wednesday we get the ISM and market manufacturing PMI figures for November. On Thursday, we note the weekly initial jobless claims figure. While on Friday we note that besides the US employment report for November, also the release of the US factory orders growth rate for October and the ISM non-manufacturing PMI figure for November. Moving now to the pound, and this would be cables for our chart in a nice downward trend line guiding the pair as it tests practically the 1.3290. Lower than that, we also note the 1.3160, and even lower would be the 1.2990. To the upside, we note the 1.3430, which provided some support a few days back, while even higher we note the 1.36, which capped the pair's upward action around the 8th to the 9th of November. Higher than that, and the highest level in our chart, would be the 1.3835. Now, the pound has renewed its slide against the USD this week and seems about to end the week lower also against the euro, and remains rather stable against JPY and CHF. On a fundamental level, it should be noted that the UK is preparing for the pandemic as the recent media headlines. Now, the number of daily new cases remains at high levels, with some even discussing the possibility of another wave. Also, the relationship of the UK with the EU tends to remain tense regarding their post-Brexit relationship, especially given UK's intentions to alter the Northern Ireland Protocol. For the time being, though, the issue seems to have calmed a bit, as the UK seems to postpone any unilateral action on the matter, allowing for some room for diplomacy to act. Now, staying on the same page, the UK-French issues with fishing rights should not be underestimated either. Moving now to a monetary level, BOE's intentions continue to puzzle traders as to hike rates or not in the December meeting. In a recent statement, BOE policymaker Jonathan Huskell raised the alarm about the rising labor costs, yet implied inflation's transitory nature once again. BOE Governor Bailey, on the other hand, seems to lean more towards hiking rates in the next meeting. Also, the markets seem to have such expectations, yet we must note that the markets had similar expectations last month and were proven wrong. Hence, we tend to keep an eye out for BOE Governor Bailey's speech on Wednesday, the 1st of December. As for financial releases, we note the release of the nationwide house prices for November on Wednesday, while we also note the release of November's final PMI figures for manufacturing and services sectors on Wednesday and Friday respectively. Moving now to JPY. And that's an interesting chart. USD JPY is 4-hour chart. Note the steep drop as JPY has gained substantial support during today's Asian and early European session. It has actually broken the 115.20, the 114.45 support lines, both of them now being turned into resistance, while it has even tested the 113.70 level. To the downside, and should practically the downward motion be continued, we may see it aiming for the 112.75, which provided some support back around the 9th of November, while even lower we note the 112.10. To the upside, besides the 114.45 and the 115.20, we also note the 116 as a possible target for the bulls. Moving now to JPY's fundamentals, and safe haven flows have provided considerable support during today's Asian session for the Japanese currency. It should be noted that a new African variant of the pandemic has hit the headlines, while the disease also firms its grip around Europe, intensifying worries for the recovery of the global economy. A new African variant is considered to be the most heavily mutated variant of the pandemic, and scientists have mentioned that it has a big jump on evolution and is very different than other variants so far, at least as per the BBC. It should be noted that back home Japan has turned into a success story with its high inoculation rates, while the number of new daily cases has dropped to minimal levels. On a fundamental level, we would also like to note that the Japanese Prime Minister Kishida confirmed the government's plans to actually release some of its oil reserves, at least in a way compatible with Japanese law. On the monetary front, the ultra-loose approach by the BOJ to support the Japanese economy is expected to continue, albeit the easing of the pandemic's grip over Japan has reignited discussions among analysts on whether to support provided should be scaled back or not. On the flip side, it should be noted that supply shortages still hinder the Japanese economy from going back into full force. Now that's an additional reason why to keep an eye out for the release of the preliminary industrial output for October, due out on Tuesday's Asian session. At the same time, we also get Japan's unemployment rate and housing starts both for October, while on Wednesday, the 1st of December, we note the release of the Jibun manufacturing PMI for November. Moving now to the common currency, and this would be Euro USD's 4-hour chart. Note how this morning's price action has practically broken the downward trend line guiding the pair since the 10th of November. Now, for the time being, we switch our bearish outlook in favor of a sideways movement initially. However, there seem to be bullish tendencies which could practically overtake the pair's price action, and in such a case, we may see it aiming once again for the 1.13 resistance line, which provided some support back around the 16th of November, while also provided some resistance around the 19th of November. Higher than that, we would also note the 1.1370. See how beautifully it has capped the upward motion of the pair around the 18th of November, and even higher than that would be the 1.1435, which provided some support and has now turned to resistance back in around the 10th of November. Now, to the downside, we would note the 1.1225, which supported the pair's price action around the 22nd of November, while even lower the 1.1165, and the lowest level noted would be the 1.1090. Now, overall, and Euro's weakening against the USD continued for a third week in a row, yet the single currency downward motion seems to be broken today. Moving now to Euro's fundamentals, Euro's traders are to have a busy week ahead, as on Monday we get Eurozone's business climate and economic sentiment for November and Germany's preliminary HICP rates for November. On Tuesday we get France's final GDP rate for quarter 3 and the preliminary HICP rates of France and Eurozone for November. On Wednesday we get the area's final manufacturing PMI figures for November, and on Thursday we get Eurozone's producer prices for October, while on Friday we get Eurozone's retail sales for October and the rest of the PMI figures for the current month. We tend to place more weight on the release of the preliminary HICP rates without underestimating the other releases, mostly because of the stark contrast of inflationary pressures in the area and ECB's monetary policy. It should be noted, though, that the clash within the ECB seems to be forming, as Lagarde's renewed pushback against the idea of an earlier hike were contradicted by Germany's Bundesbank President Weidmann in face of an accelerating inflation. On the other hand, ECB board member Schnabel stated that she sees the risks related to inflationary pressures as skewed to the upside, which reflected the pressures exercised on the bank. The renewed uncertainty regarding the pandemic could solidify the bank's dovish stance. Fundamentally, the main issue for the Eurozone remains the path of the pandemic, as coronavirus seems to be flirting and firming its grip over the continent's mainland, while the African variant added to the uncertainty. It's characteristic how stark Germany's health minister warning was earlier this week, as he stated that Germans will be either vaccinated, cured or dead by spring. We intend to keep a close eye over the issue, as the area is the new hotspot for the pandemic. Moving now to the Aussie, and this would be AUD-USD's 4-hour chart. A clear downward movement characterized by a downward trend line, which may have intensified yesterday and during today's Asian session. Now, we know to the downside also the 0.7105, and lower than that would be the 0.7045, and the lowest level noted would be the 0.6990. To the upside, we would note the 0.7170, which provided some support and is now turned to resistance. Higher than that would be the 0.7230, which provided resistance in the earlier days. And higher than that would be the 0.7310. Now the Aussie, as a general comment, seems about to end the week in the reds, and that's for a fourth time in a row against the USD, and it should be noted at how low the level has gotten for the pair. Moving now to the fundamentals, once again the recent tensions between the US and China, as the US invited Taiwan to its democracy summit, didn't help much. Shouldn't tensions escalate further in the US-China relationships, we may see the AUD suffering further. Aussie traders are to keep a close eye on the financial releases next week. On Tuesday, we note the release of Australia's building approvals growth rate for October. On Wednesday, we get Australia's GDP rate for quarter 3. And should an acceleration be marked, we may see the Aussie bulls getting a breather, as it would confirm the recovery of the Australian economy and vice versa. On Thursday, we would also note the release of Australia's trade data, with special emphasis being placed on the trade balance figure, and on second note, on the exports growth rate. But we also get interesting metrics from China in the coming week. On Tuesday's Asian session, we get the NBS manufacturing PMI reading for November, and the following day the Caixin manufacturing PMI figure for the same month. Now, Australian exporters of raw materials are to keep a close eye on the metrics of China's manufacturing sector, as an expansion of economic activity in the sector could imply a greater degree of exports of raw materials from Australia to China. Moving now to the monetary front, RBA's persistence in pushing any rate hikes in the end of 2023 could also continue to weigh on the Aussie for now. Yet the metrics to be released, as well as the employment and inflation data released in the past week, could have a bearing on the market's perception about the bank's intention for its next meeting on the 7th of December. Also, on a more fundamental level, a possible increase of the uncertainty in global economic recovery, along with the disruption of international trade due to the pandemic, more or less could also weigh on the Aussie. Moving now to the Canadian dollar, and this would be USD CADs for our chart, with a clear upward trend line, practically intensifying over today's Asian and European session, as it has broken the 1.2710 and has tested the 1.2775, which for the time being seems to be holding its ground. Now, the CAD is about to end the week in the reds for a 5th consecutive week in a row. In the coming week, we may see the loonie presenting increased volatility as a number of high-impact financial releases are due out. We make a start with Monday, when we get Canada's current account balance for quarter 3, while on Tuesday we highlight the release of Canada's GDP rate for quarter 3. On Wednesday, the 1st of December, we get Canada's market manufacturing PMI reading for November, and we close the week with the release of the Canadian employment data for Friday, the 3rd of December, at the same time as the release of the US employment report for the same month. On a fundamental level, oil prices seem to be on the rise for the week until yesterday, as the news about the African variant of COVID altered completely the fundamental picture for oil, forcing oil prices to a steep correction lower, as oil traders seem to worry about the demand levels. At the same time, OPEC issued a warning that the US and other governments move to release part of their strategic oil reserves could create a surplus of oil in early 2022. Oil traders now await OPEC's response on the issue and on whether it's going to decide a rise in production levels or not at its next meeting. It's on a ministerial level, and that's on December 1st to 2nd. Now, should oil prices continue to go down, we may see the CAD getting less and less support, or even actually weighing on it, and snapping, practically intensifying the downtrend which is in for the month over month now. On the monetary level, we note that BOC's confidence remains for the time being present, yet we expect the bank to keep a close eye on the release of Canada's GDP rate and employment data for November. The housing bubble in Canada is a big issue, and it's characteristic that a senior official of BOC has been reported to be warning that the rush in the country's housing market increases the risk of a correction. Now, moving towards the end, and as a general comment, Overall, we expect volatility to remain present in the coming week as well. The USD dominance over other currencies could be solidified further given that we have a high number of high-impact financial releases dispersed over the week. On the other hand, there are also a number of high-impact data stemming from outside the US that could provide the opportunity to shine and move against the market norms, creating trading opportunities out of the norm. As for other markets, we would also note that it's Black Friday today and Cyber Monday is to follow, which could affect the US stock market somewhat. Also, we must point out the job of the tech sector in recent sessions as investors weighed also the accelerated inflationary pressures in the US economy. As for gold, we note that the negative correlation of the precious metal was also expressed in the past few days, as USD gained on the one hand and gold retreated. It should be noted that the precious metal may have also been bearishly influenced by the rise of US yields in the past days of the week. Overall, we see the case for negative correlation of gold with the USD to continue to be expressed in the coming week as well. Overall, that should sum it up for the day, and we would like to thank you for watching this video. We hope that you found it useful and you could more or less use it for your trading purposes. From all of us here at IronFX, best wishes for solid trading.